This one box strategy has made my trading extremely simple, and it's so easy that a beginner could start doing this today. It helps me to understand which direction the market actually wants to move, along with when and where I should be placing my trades. And after backtesting this for over a year, we have seen consistent profits again and again. As requested from a lot of you in the previous video, we will be diving into our exact box strategy and how we identify this on the charts a little bit deeper. The concept that we use alongside this strategy is AMD, and we have gone over this in the previous video, so if you need more information on that, then please make sure to click the link in the description for it. If not, this is how we dive into the strategy. So diving straight in, the first thing I want to go over is the three main steps that we use for this strategy. I want to simplify this as much as possible so that you guys can find this as easy to follow as we do every single day. The beauty of this is you don't need to overcomplicate it. You can just let the strategy play out through these three steps. If you wanted to, you can set alerts, and then all you need to do is wait for these three things to happen and you can place a trade. Okay, let's dive straight in and move on to the first step of the strategy. Now, the first thing we're going to look for on the charts is a sweep of liquidity. And it's not just any sweep of liquidity. We want this to be a sweep of an Asian session high or low, or a London session high or low, really. We're going to mark out our sessions, and I'll show you how to do that with an indicator that we have specially designed for this later in the video. And then we're going to wait for a sweep of either the high or low. Let's say this is Asian session here, and as you can see, we have our highs and our lows of Asian session. Then the first thing that we want to do is wait for a breakout either above this top line or below this bottom line. As you can see here, we've had our breakout above this top line, so that is an indication of our first sweep of session liquidity. Now, although this is only step one, it is vital within the strategy, because if you refer to the previous video, you will notice that this is already step two of AMD actually playing out, and this is the main thing that needs to happen for us to get a big influx in movement in price. For price to start to move with power in one direction, we need these sweeps of liquidity. So this is a vital step that you can't forget. With that said, let's move on to step two of the strategy, which is a market structure shift, or a CISD, or a change of character. Now, in this example here, we have a bullish market, so price is making higher highs and higher lows consistently here. And then, as you can see here, this was our most recent low, and now our new low is a lower low. It's below the previous one. So because of that, I've made a mark in here, as you can see, and this is our market structure shift, or our CISD. Now, the reason this is important is because we want to catch a reversal, not a continuation here. So if we look back at our first step, which is the sweep of liquidity, prices came up and it has broken above this line that we wanted it to. So now, if price has moved up, this is almost a zoomed in version of step one. We've moved up here, which is what this part is, and now we've had our shift to the opposite direction, and we start to make lower highs and lower lows. This is so important because this starts to show signals to us from the market that price is wanting to move in the other direction. We want to collect as much different confluences as we can to show that price wants to reverse before we enter our trade. And these two here are perfect examples of a confluence that would show prices moving in that direction. The third and final step we look for after we've had our sweep of liquidity, we then have our market structure shift in the opposite direction. The final step that we want to look for is our Fibonacci retracement. Now, our Fibonacci retracement will be drawn on the leg that's created the shift. So in this case, that would be this leg here. This is the leg that's created the shift. So our Fibonacci retracement will be drawn from the high to the low of that leg. And we would have these levels marked out, which is the 0.618 and the 0.786. Now, these are key levels because this creates almost a box or a golden zone within this Fibonacci level. And this box or golden zone, after backtesting it for over a year, has proven time and time again to be the place that price always wants to retrace to after it has a big move in one direction like this. So it's vital that you get this box marked on your chart, because this is going to be the perfect point that price will start to turn and retrace in the direction that you want it to, giving you major profits. Now, it's super simple and straightforward for me to show you this on this document here with the example. The reason I've done this is to simplify it as much as possible. Now I'm going to take this data over to the charts and I'm going to show you exactly what that looks like in a live example. Okay, so now we've jumped onto the charts. I'm actually going to show you two examples of two trades that I personally took in the same day that made me over $7,000. Here's the proof on screen. Now, the beauty of these two trades is I took one in London session and that was a buy, and I took my second in New York session and that was a sell. Now, this proves that although higher time frame buyers can definitely help when it comes to identifying a better entry for your trade, you can actually trade this intraday without worrying too much about higher time frame buyers. And I'll show you that with both of these examples here. So as you can see, we're currently in or towards the end of Asia session, and you're probably wondering, how have I got this box on my screen? Now, that is from an indicator called Sessions by Lux Algo here. Now, when you first put it on your screen, it won't look like this. So these are the settings that I have to make mine look exactly like this. If you want to copy them now, pause the screen. Once you've got that done, we're going to move on to the first step in the strategy, which, if you remember, is our sweep of liquidity. So we're waiting for either the highs here or the lows of this session to be swept. If I play this forward, you can see here that we have almost instantly swept the lows of our Asian session. So now we can already move on to step two, which is waiting for our market structure shift. So now if I start to play price forward, we can wait for our market structure shift in the opposite direction or to the upside. And as you can see here, we have just had that right now. So we've had our high here, then our lower low, and then our lower high, but then we've had a higher low and a higher high up here. So you can see we've had our market structure shift around this area here as we've moved upwards on this leg. And the next step will be to move on to our Fibonacci retracement, which is the final step of the trade. So I'll take the Fibonacci retracement from my toolbar and I'll draw from the low up to the high of this leg. And then what we're going to do is we're going to wait for price to return to the 618 level, where we'll place our buy position like so, and we'll have our stop loss at the lows with our take profits at a 2-to-1, which will bring us around here, well, perfectly here. And we'll wait for price to come back down. Now let's just quickly recap and double check that we've hit all parts of the trade before I get into this trade. So if I take my highlighter, we've had our sweep of Asian lows here. We've then had our market structure shift here, and then this is the leg that's created the market structure shift. So we've gone from the high to the low, or sorry, the low to the high when we've drawn this fib, and we enter off a 618. So that is all perfect. So now let's wait for price to play out and see if this trade would have came through. As you can see, we've been tapped in here, and we've also hit our take profit in quite a quick space of time. And now we'll move on to the second trade, which is actually within the same day. Now, what I'm going to do to make this easier for you guys to see is I'm going to remove all of the drawings here, because I actually use London session in my next trade when I'm trading through New York to place this sell. So if I remove all these drawings, you'll see what I mean. We're now using London session as our area to check for a sweep of liquidity. So we've got our highs and our lows here. So we want this to be swept once London session is closed out, which it will be soon. There we go. So as you can see here, London session has closed out and the box has completed, but we've almost instantly had our sweep of the highs here. So we've moved straight up and swept the highs. Because of this, we're now looking for an opposite trade. We've had a buy down here. You might still be able to see if I draw our sweep of the lows, market structure shift, and then we drew our fib on this leg, entered about here. So now we've had our sweep of the highs. So we want a market structure shift in the opposite direction and then come back up, hit our fib level, and then take the profits in a sell position. Okay, so now we wait for our market structure shift, and if I play price forward here, you can see it's quite hard to see here, but this is why I also have the fractal indicators on, which if you guys want to steal, you also can. It is just called fractals. Oh, sorry, it's up here. And these are my settings for it. If you do want to copy the same settings, just black as the top two, and that's the main thing. This helps me to identify highs and lows without using any discretion. It's very mechanical here to do this. So as you can see, based off the fractals, we've had a low on our higher high, then we've had a lower low here. So we've actually had a market structure shift, or even still here, we've had a market structure shift in the opposite direction. And this is the leg that's caused the market structure shift. So this trade actually happened quite quickly. So because of this shift here, this created a shift on both of these legs here. We needed to then draw our Fibonacci retracement. So I took it from the high all the way down to the low here and drag this across and out. And you can probably already see that the trade's played out. It's hit our 618 perfectly. So I entered a sell position on the 618 here. Again, I set my stop loss just above the highs, 10 pip stop loss and a 20 pip take profit, because that's a perfect 2-to-1 here. In this particular trade, you can see I have my 2-to-1 risk to reward with a 10 pip stop clearing the highs and on 20 pip take profit. But you'll also notice I'm on the 3-minute time frame. And once we hit our entry point, we came towards our take profit in 1, 2, 2.5 candles. So this trade was hit within 6 or 7 minutes. And because of the speed and the volume of this trade, I decided once I hit my take profit, my 20 pips, I'm going to set my stop loss there. Now, I'm not only completely risk-free in the trade, but I also, if I hit stop loss, I'll be left at 2% in profits. So then now, anything that this trade runs is extra profit for me. And worst case, if it comes back up the trade and it taps this line here, I'm getting taken out of my original take profit area. So I've made 2% no matter what. And as you can see here, price did come down a little bit further, and I think I took my profits around about this low here when I saw the price started to slow down a little bit, and we made around 40 pips. Okay, so that is 2 live examples of exactly how we trade our box strategy. And like I say, if you need more information on the AMD side of this that we use as a concept alongside this strategy, then please click and check out the previous video on our channel. I will leave it in the description for you guys. But that is everything for this video. I hope you guys enjoyed, and I will catch you in a bit. Peace.